For more on investing in China, let's bring in Brendan Ahern, KraneShares Chief Investment Officer. Brendan, welcome. So, I mean, it's been hard to really have a long-term view for a lot of investors in China because is the crackdown the real enduring policy, or is this now alleviation of it the real enduring policies? Does this, between what we're hearing from about Alibaba and Yellen's visit, provide any clarity?
Yeah, 100%, John. Certainly Ant Group is what started the regulatory crackdown going back 2 years ago. So I think it's somewhat fitting that this fine being finally paid by Ant Group kind of is the final nail in the coffin, kind of puts the issue to bed. And I think, secondarily, besides the internet regulation, a lot of investors have been concerned about the geopolitical relationship and this dialogue and communication. You had the Blinken trip, now the Yellen trip, likely a John Kerry trip. That will put, lessen some of that geopolitical risk that's kept a lot of investors on the sidelines.
But is that just a Band-Aid? What I'm wondering is it sort of seems like, okay, China's in a little bit of a complicated macroeconomic position right now. Are they just doing this now because they kind of have to, and then they're going to tighten up again, right, when they feel like they can? Are market forces just something for tough times? Are investors going to get hosed again?
No, I think in general, the Chinese economy does need the companies we hold within KWEB, that these companies are the transmission engines for domestic consumption as it occurs online. But secondarily, remember, a lot of U.S. multinationals have been doing really well in China. A percentage of their revenue is coming from China. And those companies really haven't had any beta. There's no correlation to the political risk in stocks like Apple and GM and ExxonMobil and Tesla and others. So I think it's really been focused on Chinese equities, and we think this improvement in the dialogue and communication will help bring some of these professional investors back into the space.
Yeah, it reminds me of what Greg Hayes, the CEO of Raytheon, said not too long ago about this idea of it's not decoupling, it's de-risking if you're a U.S. multinational. We've seen some pretty weak data coming out of China, and a lot of traders and investors pointing to the PPI data that was out of China overnight as pointing to a potential deflation problem, increasing expectations that maybe perhaps we could see even more stimulus and the reemergence of a reflation trade. How are you thinking about that? What does that mean in terms of how you're thinking about investments right now?
Yeah, I mean, certainly you've seen commodity prices be quite weak. And therefore, that is reflected in the poor PPI. At the same time, China's economy faces the headwind of a slowing economy. So demand for the world's factory is going to lessen, which is why we believe you're going to see a lot more emphasis and focus on the domestic consumption story in China. And at the end of the month, Morgan, we have a very important Politburo meeting. You have the very senior officials are going to really articulate the economic stimulus, economic policy for the second half of this year. And we really do believe it's got to be domestic consumption because the exports will continue to face the headwind of a slower global economy.
So, Brendan, how much risk is there for Chinese internet companies over U.S. policy on AI access? We just heard from Andy Jassy last week. He said, hey, China cloud players have plenty of AI capabilities. There's no real issue there. But is there, and is there valuation-wise?
Yeah, I thought your interview, John, was excellent, and it shows that these domestic players are doing well, but also foreign players are doing well in China in cloud computing. I think the Biden administration continues to articulate this idea of a small yard with a high fence, that dual-use technology that have the potential to be used in military defense. It makes sense that the U.S. holds back on that. At the same time, they have to articulate the policies. They have to give transparency, or else you're going to have a lot of U.S. I mean, look at Qualcomm. 2/3 of their revenue is coming from China. KLA Semiconductor, Applied Materials, Texas Instruments. There's a lot of U.S. semiconductor companies. They need to be able to prove that their chip, that when it's made, it's going to the Sony PlayStation factory, or it's going to the Apple factory in China, and it's not being used in a potential military application. That makes perfect sense, and those rules should be articulated.